I got a question this week on initial balances on what initial balance should you use? The beginning of the cash session, the beginning of the Globex session? Do you use an overnight session and what's the relevance of that? So I'll try and answer some of these questions. I'll give you a very brief basic on initial balances and then also why you might consider using certain different ones. So, which one to use? Ultimately, this is going to depend on market and whether you have a cash session. Now, the question specifically was relating to FX markets, or one of the references within the question was related to FX, and what do you do there? Well, the problem with FX is there is no cash session. The underlying, the cash currency, will trade 24 hours. So there is no beginning of cash session, whereas with something like S&P, T-note, oil, gold, any of these still has a more cash session. Oil and gold less so now because you don't have the official pit session. But there is still a sort of more designated cash session anyway. So with currencies, you now have to look at it and consider the entirety of the session. And I'll come on to, with currencies, what you might be looking at there. With anything like these, I would be looking at the first hour of the cash session as your initial balance. The other thing you need to consider as well with an initial balance is, what do other people look at? I know this sounds a bit like trying to follow the crowd, but what I mean by this is if other people are looking at a certain time period, well, that becomes the reference. So that's what everyone then starts to look at, and it becomes self-fulfilling. So it's not a case of, oh, I don't want to follow the crowd and do something different. Sometimes by following the crowd in terms of knowing what everyone else is looking at is where you get the greatest amount of information. So on the whole, first hour of the cash session is going to be the important bit. Now, the other side of this, should you value the overnight session? Of course, there's not a straight answer, but the main answer to that is yes, absolutely, more so in certain circumstances. And I'll give you an example of this from yesterday in the S&P, in fact. Very quick basic theory, and I'm not going to elaborate too much more on this and go into open types, and this is perhaps a midday session for another time. But basic theory on initial balance is, the larger the initial balance, the less likelihood of trend. Now that does not mean no direction for the rest of the day. But if you have an initial balance that's got a wide range, and like I say, we'll perhaps come in and do initial balances again at some point and look at how you define a wide-ranging initial balance. But if you have a wide-ranging initial balance, the way to think about this is much of the business of the day has already been done. And so therefore, further movement is likely to be limited, and you can easily see trade within the initial balance. So it doesn't mean that you won't get volatility and you won't get action, but what it means is that this is more likely to be two-directional and quite wide-ranging within the already established range. Whereas with a smaller initial balance, like that, this is one where once you break, you can get more directional. It may well be that these 2 days have the same amount of range in them. But the smaller initial balance, once you're out of it, gives you more directional scope, whereas there will be movements within this, but you won't get that clearer directional type movement. So that's basic theory. Let's go and have a look, start off at, I'll wipe these bits off. The importance of the overnight session. Now I said it depends on where you are. So what I've got here is the S&P from yesterday, and then a little bit of today's overnight session as well. Right, so what happened yesterday? Well, on the pit session, as you can see here, starting just here, pit session we rally. And then the overnight session, we rally again. This is a situation where it's important because what's happening here is everyone's getting themselves long. Now, it's not that everyone in the market is long, but what it's suggesting to you is that, well, if it's gone up, you clearly have got more people buying than selling. On the back of what is already a reasonably strong move higher anyway, this is important because what this is now showing you is that weaker participants, look at the volume traded, are now predominantly long. Now, what this means is that, and the way to think about this is, if you are a very large participant, you've got a large amount of business to do, where are you going to do your business? You're going to do it when the volume's there, when you know you can get filled, not in the middle of the night. So therefore, smaller participants can influence a move. They're not going to be able to counter any larger participant trade that comes in the cash session once the NYSE opens. So that's what you've also got to remember with the cash sessions. We now have the open of the NYSE. Now you've got the underlying traded, whereas this can be a movement without the underlying stocks trading. Are these people going to stay in if this doesn't go higher? This is where it's important. Answer is, on the whole, no. Imagine you're long in the overnight session. You boy are here. You're now up here. You're 20 handles on side. You're thinking to yourself, come on, cash session, come on, get up. But if it doesn't, you're not going to be able to influence that and buy more and keep the market up. You are going to have to accept that and get out, which then creates this reversal type pattern. And that's partly why the S&P then had this later drop in the day. All of those long in here didn't get the move they wanted, but equally didn't necessarily get stopped out, and then you get the wash out later. The other reason that when you have a clear directional move in the overnight, that you may not get continuation, is now if you're a buyer, and let's say you missed this very late move, or not the late move, but sort of the move up in the cash session yesterday, say you've missed that, why are you now going to come in and aggressively buy into the highs? You're not. You're going to say, right, okay, well, I still want to buy. Let's bring my bids down and start buying pullbacks. So the impetus of buyers is less. That's the importance of the overnight session. It's an understanding of the likelihood or willingness for people to keep on buying at certain points. So let's look at this from a cash point of view. Cash session point of view, what we had the previous day, initial balance, excuse me, initial balance, break the initial balance high, we stay above, and that's a really important thing. That once you break above the initial balance, we don't move back inside it, so just here. All right, you move marginally back inside, but it's not a great deal. And then you get this trend type move. You see value builds and builds higher. Doesn't fully shift value higher, so there's a little bit of doubt in that move. What you then get after that gap up, consolidation. And that's because of that overnight movement creating the gap up. And then finally, when this doesn't result in a continuation, you then have this washout. So you can see this from the initial balance here. You have an initial balance that trades two directional, indicating a lack of conviction. That's the other thing to take from the initial balance. That's the first hour of cash. We stay within it as well. So with no break of the initial balance, you're being shown that there's a lack of direction in this market. So that's the importance of looking at the cash side of it, that you're getting a sense now with the impetus of larger participants, this move can get going. In this case, with it already gapping up, there is no impetus. And so with the inability to break the initial balance, the market goes nowhere. That's what you're waiting for. That's one of the ways to use that initial balance as well. That once you've got the initial balance established, that's shown you what people think early on. Now, for anything more, you need to see it break the initial balance. And when it does, then the direction comes in. In this case, it breaks late. Everyone who's been long in here looking for it to hold the gap and keep going gets washed out, fills the gap back, and that becomes the end of the move. So the way I would look at it, I wouldn't look at the overnight as the initial balance, but more as a perception of how people have got themselves early positioned. And then the initial balance gives you a clue from there as to what you can do now, break the initial balance or not. So here we go, we got it combined between the two. So that was the overnight session previous. Difference here, this overnight session, I know you can't quite see it, is entirely within the range of the previous day. That shows you very little. This overnight session also trades up, trades down, trades back, not directional. So this is giving you the idea that this has got scope to move now because no one's formed a clear view of direction. No one's been forced to pay higher prices than they might have been able to get the previous day. The trend type move comes in the cash session once direction comes in, once you've got that cash session open, and then you get that full session as we just looked at, and continuation in the overnight. Now, let's go and have a quick look on euro. And this is looking at the value of the Globex initial balance. So the Globex initial balance, depending upon you are, for us over here, is 11 o'clock at night until midnight, currently. And it's the first trade of the day on the Globex session. Now, like I said, currencies don't have a cash session, meaning that there is no point of being able to say, right, now the cash is coming in. What I'll show you in a moment is where the volume comes in, which is perhaps a better way of looking at this. But if you look at the overnight sessions, the overnight initial balance, they're generally pretty muted in currencies unless you have any clear news. And that clear news has got to come between the closing time, which is 10 o'clock for us over here, and 11 o'clock. Unless you get news here, you will typically get a pretty small initial balance. So you've got here 5 ticks, 1 anomalous large one, 4 ticks, 5 ticks, 10 ticks. This one here has got about 4 on it as well. So it doesn't, and you look at these and the very small ones don't suggest trend more than the big ones do. So there's a limited value in looking at that initial balance. This one here had a little bit more value to it because it did take in a bit of news. That was the European Recovery Fund news. And so it gave at least an early directional move. Once done though, bearing in mind you had done that much in the middle of the night, it's unlikely to then continue and continue. So, how to look at currencies? The way I'd be more inclined to look at this is where the volume is. And with the majority of currencies, because globally still the majority of currency trading goes through London, most of the volume starts to come in from around about 7, 8 o'clock in the morning. And that's then where the direction starts to come from. So with currencies, I'd perhaps be slightly more inclined, if you're going to try and give yourself an initial balance, to look at it as the overnight from 11 o'clock until 7 a.m. when the volume starts to come in. That way you're getting a sense of the overnight trade and also that low volume trade. So you see here, small overnight, clear directional movement. These larger overnight sessions, failure to get out, this is your then key bit, which we can do on another session. Once you come out the initial balance and don't continue, so out of this overnight range and don't continue, that's where the worry comes in. This is now telling you that this is probably a ranging day. When it gets out and falls back in multiple times, not a good look if you're going to continue. goes to the other side, breaks the other side, and rotates back in as well. Whereas one with equal size overnight doesn't break until much later on in the day. And once that break comes, either on the break of this trend to give you the early entry or on the break of the initial balance, then you do get some directional element to it. This was predominantly down to the structure of this market anyway, that we bumped up against 1480 multiple times. So it was an area to break. So whilst you do have a relatively wide initial balance, you still had scope for a continuation because that was kind of overridden by the importance of those poorer highs. But I think with currencies, because you have no cash, you do have to look at it more as a case of, well, take in the lower volume trade as your early indication and then trade that effectively as your initial balance. So up until 7 a.m. UK time if you're trading currencies. Of course, if you're going to trade the more Asian-focused currencies, yen and Aussie would probably be your main two, then of course you're going to be perhaps slightly more tilted and looking at the overnight session a little bit more. But still, even they trade more volume in the European/American session because ultimately the majority of currencies you're going to want to trade are going to be against the dollar. So just bear that in mind. Currency futures have very, very little liquidity if you're not trading them against the dollar, which is also why the volume comes in the European/US session. So, as I say, I think where you have a cash session, or pit session if you will, gold, Tino, oil, S&P, any of those, I would use the initial balance on that first hour. And then check the overnight for the importance of that overnight move. With currencies, because you don't have that defining line, I would look at it as where the volume comes in. So on average, you have the lower volume period from about 11 o'clock at night UK until 7 a.m. UK. And that you could view as your initial balance, or even if you're not going to see it as an initial balance, as your overnight positioning.